watch after. All right, so I think it's up. All right, so let me share my screen now. Okay, so I want to believe you guys can see my screen. Okay, so on the chart we have two types of candlestick. We have the bullish candlestick and the bearish candlestick. The bullish candlestick drive the market upward, while the bearish candlestick drive the market downward. Now, a color does not determine if the market is bullish or bearish, all right? But we actually have, like the word standard, we normally use blue or green candle for bullish candle, and we use red candle for bearish candle. That is the word standard. But personally, I can change my color. I can make my bullish candle to be red. It depends. But if you understand a candlestick, irrespective of the color, you can tell if the candle is bullish or bearish, right? So we're going to be starting with naming the candlestick. We're going to be starting with labeling the candlestick for you to understand, and after that we move on to candlestick patterns. All right, so let's start with labeling the candlestick. Let's label it. I'm trying to turn on my whiteboard. Okay, so this is so let's start with a bullish candlestick. Now, a candlestick has four price, right? A candlestick has four display price, which is what I'm going to share with you guys now. So let's start with a bullish candlestick. A bullish candlestick opens from the bottom and closes at the top, right? So a bullish candlestick, it opens from the bottom and it goes up and it closes at the top. So this is a bullish candlestick, right? Now, most time it has wick, all right? It has wick, but this is the open price and this is the close price. So how do you recognize a bullish candlestick? When the open price is at the bottom, you should know that it's a bullish candlestick, whether the color is red, pink, or yellow. As long as the open price is at the bottom and the close price is at the top, is known as a bullish candlestick. Now, you might want to ask, how do you know which one is open or close price? Now, if the next candle that is to form starts from the top, you should understand that the previous candle is a bullish candlestick. But if the next candle that is to form starts from the down, you should understand that this is a bearish candle. So since this is a bullish candlestick, we should have another candle forming from the top, okay, like this. So this is another bullish candlestick because this is the open price and this is the close price. All right. So for candlestick, we have an open and close price. In order for you to identify a bullish candlestick, a bullish candlestick. Now, for you to identify a bearish candlestick, it starts from the top. So we have the open price at the top. I'm using the same color. I don't want you guys to have color at heart. I just want you guys to understand the opening and close price. So a bearish candlestick starts from the top and closes at the bottom. So at this point, we have the open price. And at this point, we have the close price here. All right. So since this closes here, if another candle should open, it should open from this point, okay, like this. So we also have another bearish candlestick because this is the open price and this is the close price. Now, if the next candle that is to open opens like this, opens from here and goes up, then this becomes a bullish candlestick because this is the open and this is the close. Now, in summary, you should understand where the close of the candle is and where the open of the candle is. For you to do that, look at the next candle. If the next candle opens from the bottom, you should understand that the last candle was a bearish candle. But if the next candle opens from the top, you should understand that the last candle was a bullish candle. All right. So that is for open and close price. Now let me use color for a bullish candle this time. I believe you guys have understand bullish and a bearish candle. So I'm going to use color. So I will use blue color to represent a bullish candle. So a bullish candle should start from the bottom, the open price, and it goes up. Then we have a close price at the top. So this is the open price, OP, and this is the close price. Let's use CL for close. Now we have another price label. So here we have high, and here we have low. If you observe some candle, you see wick. This thin line is known as wick. All right. So this is a bullish candle because we have the open price here and the close price here. Then a bearish candle starts from the top and closes at the bottom, right? So here we have the CL, which is the close price, and here we have the OP, which is the open price. Then we also have the wick. So if I'm to label this wick, the upper wick, whether bullish or bearish, the upper wick is always known as the high of the candle, and the down wick is known as the low of the candle. And I'm going to explain how this wick is being formed. All right. But what I want you guys to understand is focusing on the close and open price. For you to identify a bullish candle, it has to open from the bottom and close at the top. For you to identify a bearish candle, it has to open from the top and close at the bottom. So let's take a look at some candlestick here. All right. So you can see this long red candle. It has a high wick and also a low wick. Now it's open from here and it closes down at the bottom. So this is a bearish candle. Now the next candle is a bullish candle because we have an open price and the close price at the top. This is also a bullish candle. This is also a bullish candle. This one is a bearish candle. After the close of this, we had a bearish candle that closes here. Then we have another bullish candle. Okay. So with this, you should understand that bullish candle opens from the bottom and closes at the top, right? So for you to identify with color, now you can decide to make your bearish candle red. You can decide to make it yellow. Then you can also decide to make your bullish candle blue or green. But understanding where the open and the close price is, that is what is more important, okay? So if you understand everything I've been saying regarding bullish and bearish candle, just type 2 on the chat box so that I will talk about the week. If you understand everything I'm saying regarding bullish and bearish candle, just type 2 on the chat box. All right. So how do we form, or what is the idea behind this week? What is the idea behind this week? Now you cannot determine, take notes, you cannot determine if a candle is bullish or bearish until it closes, right? You cannot determine if a candle is bullish or bearish until it closes. Now, a candle can open as a bearish candle, and at the end of the day, it will close as a bullish candle. It all depends on where the closing price is, right? So if this candle opens like this, it opens at this point. So this is the opening point. Now, if it goes low, right? If it goes low like this and it fails to close at this point, then all of a sudden the market starts going up. Now, this same candle that goes low start going high, and at the end of the day it closes at this point. Right now, this is a bullish candle. But as of when the market opened from this point, it went low. So this was the lowest point the candle got to. Now, this lowest point, that is what formed this week, this low week. All right. The candle got to this point, but it failed to close at this point. It went back and it rose above the open price and had to close at the top, which makes it a bullish candle. So this lowest point it got to before reversing back to the top is known as a low. All right. So a candle can actually open from the top or from the low. Let's say a candle opened here. Now, you cannot determine if this candle is going to be bullish or bearish until it closes, right? So the candle can actually buy to the top like this, okay? It gets to this point, and at the end of the day, it failed to close here. Then it goes down again like this. It goes down again like this and closes. Now, this is now a bearish candle. But the candle started as a bullish candle, but it failed to close here. Now, at this point, we are going to have a high, right? Because this high is actually the highest point it got to before reversing down, all right? So the high and low indicates the highest point the candle got to before reversing or closing. But the point is that the candle failed to close at the low, or it failed to close at the high, but it actually came back to close wherever it wants to close. Okay, so you get high and low when the candle failed to close. Now let's take a look at this example. Now imagine this candle, this 4-hour candle, right? The moment it's open from here, it went to this point. Now it has formed a high. If this candle should reverse back and close as a red candle, this becomes a high and down becomes a low. All right. So you can only determine a candlestick when it closes. You can see the candle is trying to turn to bearish, right? Now, let's say for instance, let's take a look at this long candle, the one we are seeing at the middle. The idea behind this candle, this is a bearish candle. Now, the idea behind this candle is that the market opened from here. The market opened from here. Before coming down, it went up to this zone, right? It went up to this zone and formed a high. If the candle had closed here, it would have been a bullish candle and the color would have been blue. But the candle failed to close at this point. This is where it opened from, and it went up and it failed to close at this point. Then it pushes back. Finally, it went down to this point to form a low, and it went up a little to close. So as long as the close price is below and the opening price is above, it's a bearish candle, right? So that is the idea behind this candle. Now let's take a look at this other blue one. What is the idea behind this bullish candle? Now, since it's a bullish candle, it means that the open price is at the bottom, right? So the candle opened at the bottom at this point. It's opened here. It went up all the way to this point, right? But it failed to close at this point and it formed a high and it came back to close here. So as long as the close price is above and the open price is below, is known as a bullish candle. Now take a look at this candle. This candle was actually blue before, all right? So you cannot actually determine the candle until it closes. So this candle opened here, it went up and it failed to close. Now it's trying to come down. So if this candle should come down like this and close, this is now a high and it will be a bearish candle. So that is how high and low are being formed. All right. So I want to believe you understand the idea behind high and low candle. If you understand, just type 3 on the chat box before we proceed to candlestick patterns. Type 3 on the chat box. All right. All right. Now, there are various types of candlestick patterns. Ernest, probably you can rewatch the video again to understand, or you can just type what you don't understand. Probably after the class, I will explain. Now, there are various types of candlestick patterns. These candlestick patterns determine, most times you can use it as entry to know when to buy or when to sell. So I'm going to be telling you like 4 or 5 types of candlestick pattern. If you spot this candlestick pattern on key levels like support, resistance, demand or supply zone, you can take hold of that opportunity, because these candlestick patterns, they are actually on a key level. So if you spot them on a key level, you take hold of the opportunity and enter a buy or sell market. All right. So for candlestick patterns, we have the single candlestick patterns, we have the double candlestick patterns, we have the triple candlestick pattern. So if I'm talking about a single candlestick pattern, it's actually a pattern that is just made up of only one candle, right? A candlestick pattern that is made up of only one candle is known as a single candlestick pattern, all right? Then a double candlestick pattern is a candle that is made up of two candles, why a triple candlestick pattern is a candlestick that is made up of three candles. All right, so that is the candlestick pattern I'm talking about. So let me start with the single candlestick pattern, and after that I am going to show you how to identify them and how to take opportunity with these candlestick patterns. Right now, the first one we are going to be looking at is known as hammer. All right, we're going to be looking at hammer, or let's say pin bar or bullish pin bar. All right, so let's look at hammer. Now a hammer is a bullish reversal candlestick pattern. Take note, it's a bullish reversal candlestick pattern that if you should spot it on a support zone, it can actually tell you that the market is likely to buy. Right now, this is what a hammer looks like. This is what a hammer looks like. It looks like this. So if you should spot this kind of candle on a support zone, it can tell you that the market is getting ready for a buy market. Now we have a pin bar which looks like a hammer, all right, but it has a longer wick like this. So this is actually a bullish pin bar, and this is a hammer. This one is more effective than this because the rejection is more compared to this one. So this is a bullish pin bar and this is a hammer. Now they look alike, but this one has more is more effective compared to this one because it has a longer wick. Now, based on what I told you guys about opening and close price, if I should explain the idea behind this candle, it is very simple. Now the market opened from this point, and after opening, it went down to this point, but it was unable to close at this point. If it had closed at this point, it would have been a bearish candle. Now, it failed to close here. The buyers came back to the market. They took it up again above the entry price, sorry, above the opening price, and they had to close it here. So as long as the close price is above the open price, it's a bullish candle. So this is a pin bar and this is a hammer. So if you spot it on a support zone, it can tell you that the market is likely towards buy. So let's see if we can see something like that, right? um I would love to use this, but this is not a, this is a dragonfly doji that looks like a hammer. So let's see if we can spot a hammer on a support zone. So this is actually a hammer. All right, okay, let me just reduce my, let me check, let me just check. I need something to, all right, so let's look at this. Although this hammer has a wick, but I don't want to use this one. I need something you guys can relate with as of what you guys are seeing on the drawing board. I just want you guys to relate with it. Let me see. I think GPUSD should give me what I'm looking for. All right, I've seen one. So this is a hammer. Let me zoom in. Let me see if I can capture that point again. All right, look at this. So this is actually a hammer. This is a hammer. Now, this is an order block. This is actually a bullish order block. And you can see that the market actually respected the order block, right? Now, the market was coming down and it got exhausted and it formed a hammer. You're seeing this is a hammer, what I was trying to show you guys. And after the hammer was formed, now we have a hammer on top of an order block. So this is like two confluence. I'm using candlestick pattern and order block as my confluence to buy. Now there's a hammer resting on top of an order block. And what happened after that? The market went up, right? So if you can actually spot this candlestick pattern on key levels like order block, support, or resistance, it will actually help you a lot. Okay. Now look at this one. Look at this one. I think I saw one again. I think I saw one. This one, okay, it has a week, but I'm just looking for the one you guys can relate more with. Let me scroll. Okay, look at another one here. Look at another one here. This is actually a hammer, all right? And this place is actually a key level, right? This place is actually a key level. If I should scale down, this 1 hour, if I scale down to 15 minutes, you see that this place is actually a support key level. All right, now the market was coming down, and after that, we have another hammer and it went up, right? So your duty as a trader is to see this, is to spot this candlestick pattern on a key level. Now, mind you, it can open anywhere. It might not be on a key level you're expecting it to be, but for it to be more effective, for you to take hold of the opportunity, at least you should be able to spot it on a key level, right? Now, for instance, if this market was coming down, if we are having a downtrend like this, the market is coming down, then on a particular zone, a support zone, the market got to a support zone. Remember, the market is coming down and it got to a support zone, and you see a hammer being formed, right? It's an indication that this market is likely to reverse, because we have the market coming down and now this is a support zone, and support zone, this is actually where price has respected over time, right? So in the past we have price respecting this zone. Now you're seeing a hammer like this. This can be an indication that the market is likely to reverse to the upside. Okay, so this is for hammer, right? Now, the brother of this is known as inverted hammer, which is also a bullish reversal pattern. Now, it looks like this. This is known as inverted hammer, right? This is known as inverted hammer. So if you also see something like this, if you see something like this on your chart, on a support zone like this, it also tells you that the market is trying to go up. So you can actually see something like this, inverted hammer on a support after a long sell like this. So you see something like this on a support. It also tells you that the market is likely to go up. So take notes. I showed you guys two candlestick pattern now, single candlestick pattern, the hammer and the inverted hammer. This is pin bar. It's the same thing with hammer, but just that it has a longer wick. All right. So they are all the same thing. Hammer or pin bar or bullish pin bar is the same thing, but this one has a longer wick. So this is known as inverted hammer. If you spot this on a support zone, the market is likely to go down. Now let me see if I will see something like that. Are you seeing a pin bar? So this is actually a pin bar. And after that, what happened? The market went up. It's just for you to spot it on a support level, and from that you can, make decision. Let me see. Look at another good pin bar on a support zone, right? On a strong key level. So the market was selling, exactly what I drew there. The market was selling, and after that you have a pin bar. And what happened next? The market went up, right? So that is it. So I'm trying to see if I can see inverted hammer. All right, although this is inverted hammer, but it's not at the place where I want it to be. So I'm not going to consider that. Um, Let me look for inverted hammer. This is, look at another hammer. Or yeah, this is another hammer on a key level. The market was coming down, and after that, it formed the hammer. What happened? It went up. So your duty as a trader is to spot that candlestick pattern on a key level that supports the trend. Okay, now this is inverted hammer. You're saying, right? Inverted hammer. The market was coming down and we had an inverted hammer. And what happened after that? The market went up. So take note of inverted hammer and the hammer. If you understand the explanation of hammer, just type one on the chat box so that we can move to another candlestick pattern. Okay. I actually have a PDF here, candlestick pattern, but I don't want to use it. I love explaining from my head so that you guys can relate and understand. So I can actually send this to the group later. You guys can just, read ahead. All right. Okay. Now the next one we're going to be looking at is shooting star and hanging man. Shooting star and hanging man, right? Shooting star and hanging man. This is still under single candlestick pattern. So shooting star is actually a bearish reversal pattern, which means is a candlestick that gives you a sell signal, right? Is a bearish reversal candlestick pattern. All right. So let me just draw the hammer and then doji and keep it somewhere so that you can remember, right? So this is the hammer and this is the inverted hammer as well. So this one, these are bullish reversal pattern. So you need to look for them at a support key level in order for you to take a buy entry. All right. Now the next one I want to talk about is shooting star. So this is what a shooting star looks like. All right. It looks like this. Now I'm using a red color. So if you should spot this on a resistance level, right, the market is likely to fall once you spot this. It looks like an inverted hammer, but this is known as a shooting star. Then we have a hanging man. A hanging man looks like a hammer, but it's actually a bearish candlestick, not bullish. Okay, so like this. So this is a hanging man, and this is shooting star. If you can identify this on a resistance level, after a long buy, then any of this appears on a resistance level, it tells you that the market is likely to come down from that zone. The market is going up and this appears on a resistance level, it can take the market down. So let's see if we can see it on a real chart, right? Let's see if we can see it on a real chart. Let me zoom in a bit. Okay, let's see. Okay, so we had one here. This is actually a bearish pin bar, but it failed at this point. So we are not going to consider that one. Now look at a hanging man. This is actually a hanging man. And after that, the market came down. The market was going up and it formed a hanging man and the market came down. So we're still going. Let's see how we can identify them. Let me look for GPJPY. Let me look here. Wow, time is actually flying. All right. I saw one now. Let me remove this. I saw one. I think I saw it. Okay. So look at this one. Let me zoom in. Look at this one. This is actually shooting star on a resistance zone, and after that, the market came down. All right. All right, if you can identify them, look at this one, the same thing, and the market came down a bit. Yeah, okay. So that is for shooting star and hanging man. So your duty is to identify this candlestick pattern on a resistance zone and identify this on a support zone in order for you to make your buy or sell decision. Okay, so let me take this off. Now the next one is doji, right? We have doji candle. Now the doji candle shows indecision in the market. When you see a doji, it actually shows indecision in the market. Now we have doji that looks like this, irrespective of the color. A doji has no body, it just has wick. This is a doji. We also have a gravestone doji that looks like this. We also have a dragon fly doji that looks like this. So these are the types of doji you're likely to see on the chart. But if you combine doji with a full-bodied candle, it can tell you what to do. All right, I'm going to be talking that. I'm going to be saying that when we get to double candlestick pattern. All right, but anywhere you see this kind of candlestick pattern is known as an indecision candle. Now, when the market is indecisive, right? When the market is indecisive, you might not tell if it's going to go up or down, right? So this is known as a doji, a gravestone doji, a dragonfly doji. It might be blue, it might be red. So the color doesn't matter. All right. So let me see if I can spot one. Yeah. It has small or no body. Look at this one. This is a doji. This is a doji. This is a doji. This is a doji. Like when you see decision candle like this, you always see consolidation. You always see the market ranging. Look at this one too. This is a doji. Now, after this doji formed, we have a full-bodied candle that is formed, yeah, and we have a doji. Now, at this point, you don't know if the market was going to go up based on this candlestick, but what happened? It came down before going up. So this is a doji. So dojis are indecision candle, but if you combine them with other candlestick, it can actually tell you what the market is likely to do. All right. So that is for doji. Spell it D-O-J-I, D-O-J-I, D-O-J-I. That is the spelling of a doji candle. So these are the single candlestick pattern. Then moving forward to the double candlestick pattern. Double stick candle pattern. These are candlestick that has to do with two candles, right? Two candles. So let's start with the bullish engulfing. One of my favorite candle, bullish engulfing. Now this is what the bullish engulfing looks like. Let's say we had a sell market. The market has been selling. You should spot this on a support zone like this. Now we have the last red candle like this, very small. And after that, we have a bullish candle engulfing it, right? So the blue candle is engulfing this one, which means is bigger than this, right? So this is known as a bullish engulfing. If you see these two formation, it tells you that the market is likely to go up from here, right? It tells you that the market is likely to go up from here. So these two formation, a bullish engulfing, a bullish candle, a bullish candle engulfing a red candle after a fall, right, on a support zone, tells you that the market is going to go up. Now, the same way we have bullish engulfing, we also have bearish. Sorry for my drawing. We also have bearish engulfing, right? So after a long buy, we have the last bullish candle, and after that, we have a bearish candle engulfing the bullish candle. So the combination of these two candlestick pattern, the bearish has to be bigger than the bullish. Okay, so it tells you that the market is likely to come down from here like this. All right, so this is bullish engulfing and this is bearish engulfing. Now we have another one known as inside bar, right? We have another one known as inside bar. So this time we have the bearish candle will be the bearish candle will be the biggest one, engulfing the one inside. So we have another one known as inside bar. So this is what an inside bar looks like. This is the last bearish candle. Then we now have an inside bar like this. Sorry for my drawing. If you observe, the red is the one engulfing the one inside, but this one, the blue, is the one engulfing the one outside. So this one is known as an inside bar. Once you see an inside bar, it tells you that the market is likely to go up. And we also have a bearish inside bar like this. At this point, we have a bullish candle, and after that, we have a bearish candle smaller than this. So this is a bearish inside bar, and we can have a fall of the markets, all right, from the resistance zone. So take note of the drawing. For the bullish engulfing and the bearish engulfing, the one at the right hand side is engulfing the one at the left. Okay, for this one is engulfing this one, right? Why for the inside bar, the first one is engulfing the inside one, and this one, the first one, is engulfing the inside one. When I mean engulf, it means it's covering it, it's bigger than it. So if you see this candlestick formation on a key level of support or resistance, it tells you the market is likely to reverse. Now let's look at it on a real-time chart. Okay, I don't want to use this BTP. Let me look at, all right, a perfect example after a liquidity sweep. After a liquidity sweep like this. Now the market was actually going up after a liquidity sweep. Now this is, okay, I'm not going to say this. The formation of these two candles, this and this, is this a bearish inside bar? Is this a bearish inside bar or a bearish engulfing? What candlestick formation is this? If you know the answer, just type it on the chat box. Is that a bearish inside bar or a bearish engulfing? Please type it so that I can proceed. Is that a bearish inside bar or a bearish engulfing? This candlestick. Perfect. So this is an inside bar because this one is, and the one outside is engulfing the one inside. So this is an inside bar. Now, after an inside bar, what happened? The market came down. We also have another inside bar here. Are you seeing? This one is engulfing this. And what happened on a support zone? The market went up, right? So that is it. So let's see now. Okay. So look at this one. Now, this is actually a bullish engulfing. Okay. A bullish engulfing. After a fall, we have a bullish engulfing. Can you stop doing that? So after a fall, we have a bearish engulfing. As long as the inside candle is bigger than the inner one, this is known as a bearish engulfing. And what happened? The market went up. We have another bearish engulfing. At this point, the market went up. So look out for bearish engulfing. This is actually an inside bar. This is Schweizer's bottom that has equal lows and equal high. We'll get to that point. Feel another type of candlestick pattern. All right. So this is actually an inside bar. And what happened after that? The market went up. So your duty as a trader is to identify this candlestick pattern on a key level, support, resistance, demand or supply zone, or even a fair value gap. Now this is an inside bar, but this one is very long, but the market still went down. And we also have another inside bar here, bullish inside bar, bearish inside bar, bullish inside bar, bearish inside bar. This one took the market up and this one brought it down. All right. So you need to know the difference, right? You need to know the difference. This is bullish engulfing, bearish engulfing, bullish inside bar, and bearish inside bar. So know the difference. Once you can identify this candlestick pattern and you spot it on an area of value, or let's say point of interest, you just make your decision, buy or sell. Now, for those of you that is asking me confluences, now confluence is actually getting more than 2 confirmation in order for you to take a trade. Now, my first confirmation is that this is actually a support zone. My second confirmation is that this is a bullish candlestick pattern, and this can drive the market upward. So I've had 2 confluence, right? I can do the same thing at my resistance zone. Okay, so this will really help you a lot. You need to study candlestick, right? You need to study this candlestick very, very well. It will help you. So we also have other types of double candlestick pattern. We have the likes of tweezer top and tweezer bottom. Now the open price and the closing price are the same, right? So now if we have something like this, a bearish candle, and we also have a bullish candle like this, the open price and the closing price are the same. Like the candle, the size, the height, everything is the same. If we should spot something like this on a support, it's telling that the market is going up, right? Then if you should spot something like this on a resistance, which is tweezer top that has that has this, something like this, just observe the placement. If you should put this on a resistance, it's telling that the market is coming down. You spot this on a support, it's telling that the market is going up. Now let's see. This is actually a bullish engulfing, and after that, what happened? Okay, I've seen a perfect example for this. Let me mark it before I skip it. Let me just drop this one here. Yeah, let me remove this. No, 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 no. Let me remove this. And let me drop it here. Where is it again? Okay, let me drop it. All right, indicators. There is that line. Reduce. Let me get that line. All right, I've seen it. You are not going anywhere. Oh, all right. Where is it now? Where? I didn't get. Okay. This thing is stressing me. But regardless, let me see if I'll see another one. Let me look for tweezer top and tweezer bottom. Once I see it, I will let you know. But I saw it there. I was just trying to zoom, but the thing is misbehaving. Tweezer top, tweezer bottom. It's most times it's really rare. Like, but if you see it, it's a sure plug, or let's say sure odd. Once you see it, you can tell that the market is going to, go up, right? So I can't find it. I'm trying to see if I can see. Are you seeing this is what candlestick is this? If you remember my teachings, what candlestick is this? And the moment it happened, the market went up. What candlestick is this? Please, if you know the answer, type it on the chat box. What candlestick is this? And what candlestick is this as well? And this market is an indication that Bitcoin is still going to go up because this is an area of value, a support zone. And we had an inverted hammer, although with a wick. But for me, this is also an inverted hammer, right? And that is why I was buying Bitcoin this week, because last week we had an inverted hammer on a key level. So this guy, I'm expecting it here somewhere. So I'm still on the buy though. So that is it. Okay. Um, I want to believe you guys understand everything I'm saying. I think I'm going to continue this session on Saturday. Then I'll cover, but this candlestick I showed you, these are the major candlestick pattern. These are the major. You can just work me. I only work with bullish or bearish engulfing and pin bar. I love those two candlesticks. Once I see bullish or bearish engulfing, or even inside bar, or probably pin bar, you must not know everything, but just look at the one that works very well and take note of it. Anytime you see it, you master and you practice it. I'm going to be dropping that PDF, that candlestick Bible on the group chat. You guys can, download it and go through them. All right. So I said I was going to show you guys one of the strategy I use in executing trade, right? So let me quickly show you guys. But before I do that, I just want to believe that you guys are getting everything I'm saying, please, if you're getting everything I'm saying, just type, at least if you understand 80% of what I'm saying, just type 2 on the chat box. Just type 2 on the chat box so that I know you guys are getting it. Just type 2 on the chat box if you understand everything I'm saying. All right. Okay. Perfect. Now the keyword for today, the keyword based on attendance. The keyword for today is pin bar. Pin bar. Pin bar. That is the keyword. Take note. Pin bar. You all know what a pin bar is by now, right? So pin bar is the keyword. I'm going to be dropping the form again. Don't worry. I'm recording you guys' attendance. You won't think that it's serious, but trust me, it's really serious. So pin bar, because I'm looking for people that will dedicate their time in trading, right? So these are the people I'm looking for, not those that want to waste my time. So pin bar is the keyword. So moving forward, let's talk about my strategy. Now, you all know I love trading from key level. The reason I love trading from key level is because that is where liquidity is, right? That is where the market starts rising from or falling from. And if you also adapt that, trust me, your trading will be very, very simple without stress. A key level can be a support, it can be a resistance. If we are talking about ICT terms, institutional terms, we have order block, breaker block, mitigation block, fair value gap, liquidity pool, and the rest. So that one is for institutional trading. But what we are doing now is retail trading level. So let's just deal with support and resistance, or probably demand and supply zone. Okay. So you guys know I love trading from key levels. So my key level is support and resistance. Now, we have a resistance at the top, right? And we have a support at the bottom, okay? Now, there's a pattern I love trading whenever it happens on my resistance or support level, okay? Now, for my support level, if the market is coming down like this, okay, whether the market is going to do a fake out, which is a fake breakout, or whether the market is going to respect this zone. So this is based either a fake out or the market is going to respect this zone. The moment I see a movement like this, the first movement, and I have a pullback and I have a higher low, right? This is actually known as failure swing strategy. I don't want to use terms like that, but this is known as failure swing. Normally, this point is supposed to break this low to form another lower low, right? To continue the downtrend. But instead of forming a lower low, it's now forming a higher low. So this is actually a failure swing. Whenever I see a failure swing close to a support, my dear, I am buying and I am placing my stop loss below the last low. So if you see this kind of failure swing, this is known as a bullish failure swing. Trust me, I would say this is like 70 to 80. This strategy has 70 to 80% win rate. On a key level like this, you have a failure swing, which is a higher low on a key level, on a support zone. Just take a buy. The same thing is applicable to a resistance zone. Whenever you see a movement like this, and you see another failure swing, that is a lower high, right? Just take a sell, place your stop loss above the resistance. So this is actually a failure swing, because basically once you have this movement, the next movement has to break this high to form another high, but it failed to break this high and we had a failure swing. So this is a failure swing and this is a failure swing. So if you can spot this on key level, trust me, it has a higher win rate. Now let me check for it on a real-time chart. Okay, I can actually call this a failure swing, right? The market broke this low, came back, and we have a higher low. This low is higher than this, and what happened? The market went up. Now, for time frame, 1 hour or 4 hour is the best. Sometimes it's not really good on 15 minutes. I love it when I'm seeing it on 1 hour or my 4 hour. The moment I see a failure swing on any of this zone, trust me, I am buying. And it's very simple but very effective, right? It is very simple but very, very effective. Trust me. It is very simple but very effective. The moment you see it, just buy and go and sleep. All right. Buy and go and sleep. Or sell and go and sleep. Okay. The moment you see it, sometimes I use it as my confirmation. I just want to see resistance zone. The moment I see a resistance zone, I buy, or sorry, I sell. Okay, let me look for GPUSD. It is very, now um look at this one, a low, another failure. Okay, this is not actually a failure swing. The market is already up. So let me check for another one. Let me check for the one you can. Okay, look at another failure swing here. The market came down, it broke this low, it went up, it came down, and it formed this failure swing here. Phew, just buy. All right. For me, I can say this is a failure swing as well. The market was actually an uptrend. This was actually an uptrend, and we had a pullback. Then this is actually a lower low that is lower than this high. And what's happened? So just master that. Now, let me give you guys one very important thing. To make trading very simple, you need to keep your analysis very simple. Don't look at too many things. Now, if you can identify the trend in a higher time frame, go to a lower time frame and look for minor key level. As long as the trend is up, look for a minor key level on 15 minutes. And the minor key level you're looking for, since it's an uptrend, is actually support or demand level. Now, this is what I mean. For instance, this is an uptrend, right? This is a GPUSD. This is an uptrend. Okay, this is an uptrend. I already know that this is an uptrend. All I just need to do is to scale down to 15 minutes. The moment I scale down to 15 minutes, I'm looking for the next area or the next point of interest. So to me, we actually had a point of interest here. And as you can see, the market came back and it's trying to go up. I can tell you to buy this thing now. Before morning, trust me, to buy. As a matter of fact, I'm going to enter this trade on my real account and you guys will see the results, right? So what I did was identify the trend on a higher time frame. Then I came to a lower time frame to mark out the immediate or the recent key support zone. And the moment the market comes back there, it is flying, right? It is flying. It's that's, I mean, I don't have to say it, but it's that simple. You don't have to complicate yourself with a lot of stuff. Okay, except the market is ranging. When the market is ranging, most times you will be confused. You might not even know what to do. Okay, so my strategy for tonight is failure swing. Look for a bullish failure swing on a support zone or a bearish failure swing on a resistance level. Trust me, it's going to help you. All right, and again, to keep things simple, identify trend on a higher time frame, scale down to a lower time frame, and draw the immediate key level and wait for price to come back there. Price is going to come back there very fast because it's a lower time frame. And take hold of the opportunity. Put your stop loss below it and we fly. All right. So I want to believe you guys understand everything I've been saying and just practice everything I've said. Trust me, you will get it right. The more you practice, the more you understand. The more you practice, the more you understand. So if you know you understand everything I've been saying today, from the candlestick pattern to my strategy I just showed you guys, just type 6 on the chat box and we call it an evening. Ooh. Just type 6 on the chat box and we call it an evening. Okay, perfect. I need more 6. I guess you guys have you all heard the keyword. I'm not going to repeat it, and I'm going to share the form so that you guys can feel. All right. So on Saturday, we are going to be very practical on Saturday. Everyone will analyze the markets. You will open a position and you place a trade. Based on everything I've taught you, you better just go back to your book, read, understand, because when you come on Saturday, you analyze for me to see. If you like, no come because I say you analyze market. You are not doing it actually. But for real, everyone is going to analyze the markets, right? You might not be able to place a trade. Okay, Bitcoin. We might use Bitcoin since Bitcoin also trade on Saturday. So we might use Bitcoin. So please, if you really want to take trading serious, put everything I'm teaching you to practice, and it's going to be very, very easy and amazing. All right. I don't want to ask. I know most of you have questions, but you have questions you want to ask, but we'll handle them on Saturday. All right. But this video, I'm going to upload it and I'll send the link for you guys to go and rewatch. Thank you guys very much. It's been a wonderful evening with you all. I'll see you guys on Saturday by 11 a.m. That is our normal time, 11 a.m. All right. Have a wonderful evening. Bye for now. Okay. Okay. Mm.